and welcome to The Trade. Before we get into the charts that matter, a quick look at what traders are watching, and the conflict in the Middle East continuing to dominate sentiment as US President Trump vowed to destroy an Iranian bridge or power plant every time Iran shoots at a ship in the Strait of Hormuz, raising the stakes in the war with Iran as Iranian allied Houthis in Yemen threatened a second vital energy route. Iran's foreign minister posted on X that the country would retaliate, saying our defence doctrine is clear, an eye for an eye. Any aggression against Iran, including our infrastructure, will compel a powerful and decisive response. The World Bank chief economist has warned that escalating hostilities between the US and Iran could reignite inflation and drive interest rates higher, also knocking global growth back down to as low as 1.3%, down from 2.9% last year. Interest rate sensitive 2-year Treasury yields climbed to a 17-month high, while the yield on the benchmark 10-year reached its highest since May 20, 4.66%. The dollar eased slightly from a 1-week high after 4 straight advances. The yen saw a modest recovery from its weakest level in nearly 4 decades, and the pound is holding fairly steady against the dollar amid softer than anticipated inflation reading. Let's get more though on the currencies and see what the technical signals are telling us. Nick Twidale from ATFX joining me. Nick, another surprise jobs number.
It is, isn't it? It's very volatile. It seems to be every time we come in, there's another surprise one way or the other. But once again, yeah, that's a massive number. Aussie hasn't reacted as strongly as I thought it perhaps might, but maybe that's just the market getting conditioned to the volatility in the numbers that we're seeing recently.
Yeah, and what are we seeing though with the Aussie holding above that 70 US cent level?
Yeah, it's sitting nicely on a support trend line at the moment. We've seen a bit of depreciation on the stronger dollar recently. It has climbed back, and we seem to be trading around that 70 cent level quite nicely. I suspect there's a little bit of options interest out there, but I think in the next few sessions and the next few days, we're going to get a bit more movement in the Aussie and across the rest of the currencies. And it's probably going to come from what you were just talking about, which is everything that's going on in the Middle East. Yeah,
absolutely. I actually want to flip to the yen now, because this is really interesting what's happening in terms of potential intervention. I mean, a fresh 4-decade low for the Japanese yen.
It's fascinating, isn't it? And everything they've tried so far, the Japanese authority, it's just been pushed back in their face, really. There's really strong intervention we saw back in April, which took it down 4 or 5%. And you can see on the chart here where we've had some really sharp downside moves, but it just keeps coming back, and the fundamentals are pointing for it to go even higher. From this chart, you can see it looks a bit strange, there's no topside resistance level, because we've kind of broken through, as you said, 40-year highs in dollar yen. The next moves, from a technical perspective, you're starting to look at things like Fibonacci levels and extensions, and that's when things tend to get a little bit crazy. But for the moment, it really is a buy on dips environment. And the Japanese authorities, they've tried intervention, they've tried sort of cajoling the Japanese market, and they're talking about pension funds investing heavier into the Japanese economy. But the yen is just weakening, and particularly against the dollar at the moment.
Yeah. Okay, well, I touched there on what we've been seeing with the pound, particularly with that inflation print. It's kind of been supported by what the Bank of England has been doing. What are you seeing next?
It has. There's a lot going on in the UK, isn't there? New Prime Minister coming through, new Chancellor of the Exchequer. So there's a few things that are going to come through on that. But the pound's been relatively well behaved, and it's sitting in the middle of that range quite nicely. We have seen volatility, as we always do with cable. It is nicely supported by the Bank of England. Most central banks, and we'll probably get into the ECB in a minute, they're in another rock and a hard place, aren't they? Because they're looking at data that we've got over the last couple of months, and now we've got this increase in escalation in the Middle East with inflationary concerns. Bank of England are in a similar spot. So I think that they're relatively happy with where things are at the moment. Inflation dipping down a little bit last night was fairly handy for the Bank of England. So I think they're kind of okay with things. For now, sterling's probably going to move harder on the US dollar side of things, and that will come from the Middle East. But it's probably going to be remaining in that range, which is fairly wide. It's sort of like 130, 150 up to sort of 135.50, probably as we move through into the next quarter.
And what's happening with the euro?
So Euro's a big one tonight, so we've got the ECB. We're not expecting them to do anything, but I think what we're really looking for, the market's probably expecting a hawkish skew from Christine Lagarde because of what's going on in the Middle East, and we know euro was heavily affected when the war ignited earlier in the year. It's an interesting from a trading perspective. As you can see there, it's moving into that tighter flag. the two levels are very, very close. So I'm expecting to see a little bit of fireworks tonight in the euro, one way or the other. We're not too far off. If we break that, and it's a good downside strong support line there, if we break through that and we break through annual lows, and that would come, it will probably come from the dollar side of the equation, to be honest, but if it comes from a more complacent ECB tonight, it could really open the way for a bigger move in the euro. Conversely, if they do come in strongly hawkish, and I think it would be more from the press conference rather than the statement or the actual decision, we can break through the top side and we'll probably be exploring moves back up to 115 again.
Okay, and then what are we seeing with gold? Because we have been looking very closely as well in terms of the momentum, in terms of what the Fed might be doing.
Yeah, so it's been interesting. The last few sessions, and quite a few people in the market are noticing now, gold's gone back to its traditional safe haven trade. So that if you look at the last few days, gold's appreciated as geopolitical concerns have appreciated, and the dollar's moved up, whereas pretty much for the last 4 or 5 months, we've seen gold move very much in line with what the dollar's been doing. So if the dollar's appreciating, gold has been depreciated, and it's been moving percentages. So it's interesting to see the breakdown of the recent correlation, and it's kind of moved back to its traditional safe haven correlation. We're probably going to need a bit of confirmation over the next few days, but from a technical perspective, it broke up through that recent sort of resistance trend line. A move back up to 4,200 is probably not out the equation at the moment, but it's going to be interesting to see what happens. And if we go back to that traditional pattern, we could see gold accelerate to the top side again.
All right, say trading like a safe haven. Nick, thank you as always. Nick Twidale from ATFX. That does it for this edition of The Trade. Be sure to join us next time.